We'll see. The U.S. Department of Energy today issuing kind of a sound of alarm about rare earth metals from China. The Chinese, of course, I think 90% of the world's market right now in these metals, these minerals used in high-tech products. U.S. sounding alarm because they do not want to find themselves in short supply, as happened this year when China cut off its exports. It's hard to know what can be done about this except restarting mines that were closed because they weren't productive.
Well, I think that's what you have to do. Obviously, the price of these commodities gets so high that old mines start to become productive again. If you want to make sure you don't have scarcity in any commodity, you've got to produce it yourself. And both Canada and the United States have the resources, but there's so much government regulation and so many costs involved supporting the environmental causes around these things that many of these mines are no longer productive. You have to make up your mind. Either you want the commodity or you want to save every duck, bird, and beaver. You got to pick the middle somewhere. That's how you run a business. That's how you run a country.
It's either or for you. It's either the commodity or the environment.
You know, Amanda, I'm a pragmatic person. I think it's so ridiculous that you put so much pressure on the mining industry to save every single animal on Earth when stuff gets run over on a highway all the time. Think about it. You've got to have balance in all of these equations. Yeah, I am pushing back. I'm getting tired of the environmental movement, shutting down the oil sands, stopping our shale gas exploration.
Last
time to
time
fight
I checked,
back.
nobody had shut down the oil sands. We're going to talk a little bit more about that today. Important study from the Royal Society. As we mentioned earlier, the low U.S. inflation figures have a lot of people now using the dreaded D word again, deflation. So if prices do start to fall, here are 5 of the best defensive moves that you can make. Investing in discount stores, which would see increased business if salaries, stock markets, and home prices drop. You can invest in consumer staples, things people buy no matter what their income level. Government and corporate debt, also a good option, guaranteeing a return. Even a small one in uncertain times is seen as a good thing. And hard assets. Gold, of course, may lose value during a period of deflation, but deflationary periods are often followed by inflationary ones. Investors may keep gold demand high to protect against coming inflation. And as Kevin always says, cash is king. $1 today will always be worth $1 tomorrow. Kevin, which of these strategies do you think makes the most sense for you?
Well, I agree on the hard asset play. There's no question about it. Having that in your portfolio makes sense. But I'll tell you what I don't like about that list. I would not buy any government bonds that are more than a 24-month duration. You've seen yields shoot up in the last 6 weeks 30%. That's the beginning of a trend. Now, you can argue deflation, inflation, but the only thing that matters is rate hikes destroy bond value, and that has happened on the 10-year note. So I think I'd be very cautious going into government debt of any kind of duration.
Welcome back. We'll move over gold, make room for silver in the spotlight. That's the gist of the latest newsletter from Sprott. In investing circles, the name Sprott is synonymous with commodities, especially gold. The firm's latest note identifies silver as this decade's golden investment. David Franklin is market strategist with Sprott Asset Management. Great to have you here.
Yes, thank you for having me.
So why silver and not gold? What's better about silver than gold?
Well, probably the biggest difference is silver is such a small market. And as investors worry about inflation, they look to hard assets to invest in. So the silver market is about 100 times smaller than gold. However, what we've seen is a mass rush into silver from people in Europe, people in China, and you can see what it's done for the price.
Now, is silver a commodity that actually gets utilized and consumed versus gold? Because I've always worried about gold being something that we all have, that we've been mining for 2,000 years. Can we use it up? Is there a demand for the actual burning of silver somewhere?
Yes, absolutely. It's one of the key characteristics of silver over gold in that it gets used up in industrial processes. So about 50% of it gets used in very small amounts. And at today's prices, it makes no sense to recycle it. So that goes right to the junk pile and doesn't come back.
The price rise, as you said, it's risen recently 70% in the last year. Has some people wondering whether that's all there is. You're seeing an additional increase in the year ahead?
Yeah, absolutely. What has really changed is inflation expectations in China. I think that's the biggest demand story, where the inflation in China is racing up, and people are now lining up in Beijing for gold coins, silver coins, anything to maintain that store of value. So that is driving investment demand wildly up.
So let's talk about how to invest in it. I'm an investor. In gold, I can buy the physical gold, which I do, and for liquidity, I use the GLDs. People have different ETFs. What's the story on silver? How can I take a position in silver easily that has liquidity to it?
Well, the preferred method, always with metals, in my opinion, is to take physical delivery. However, silver is much bulkier than gold, so you would require a huge amount of space to store it. But if you're looking for a liquid investment, we at Sprott, we launched a physical silver trust where we own silver. We list shares in New York Stock Exchange and in Toronto. Market cap is around 800, 900 million, so it's a very liquid way to invest in silver.
Now, silver is often a byproduct of gold, is it not? Is there a relationship between the prices, or is it totally separate?
Well, it's totally separate, but it is a byproduct of mining operations, most often with lead and zinc.
Okay.
So what's difficult about silver is that you can't turn on a silver mine. So there's very few of them. So you've got to, it occurs with lead and zinc and has to be mined in that proportion.
So make a call on gold versus silver. If I have dollars to put to work, it's a great time to do this to you because we're just at the cusp of a new year. If I put $100,000 into each one, where do I make more money by the end of 2011? I love putting you on the spot like this.
I love it too. I would put the money today in silver.
And what kind of gains are you expecting next year?
Well, my target in the short term is $50. And that's derived from every other commodity's taken out its inflation-adjusted all-time high.
Yep.
Silver has not. So $50 is an easy move next year.
All right, David, great to have you here for this.
Thank you.
David Franklin, market strategist at Sprott Asset Management. Well, we keep